Hey YouTube, this is Zach with Achilles Financial, and we are back with another video, and this is going to be an exciting one because we are moving into earnings season. When I say earnings season, we are looking at the time period where companies are announcing earnings, and the reason that that is important is because that is generally when we see big moves from these companies. So there's going to be a lot of information that come out with these earnings. Generally, you're going to see forecasts for revenue, for profitability, for new ventures in terms of product lines, revenue goals, partnerships. So there's always a lot of news that come with this. And this is going to be a particular interest because we should see a better indicator of what the coronavirus has had in terms of an impact on a lot of these companies' balance sheets. So if you're using Robinhood, again, all of these companies are going to have earnings that are posted here. Those earnings may sometimes change in terms of when they are. They will need to be finalized. So these are just historical estimates until they are verified, and you're not going to see the estimate versus the actual verification on Robinhood, but you can find that on other websites, and Robinhood does do a good job of updating them prior to, so you should know at least 1 to 2 weeks in advance. So the one that I want to look at today is JP Chase, because when we're looking at bank stocks, they're one that tends to move a little bit more, as well as they announce on July 14th, as well as Citigroup, one of the other big financial institutions. So there are some key things that you need to be aware of when we're looking at options pricings for earnings season, and that is that there are a lot of ways that you can win, and there are a lot of ways that you can lose. And one of the key things that happen around earnings season is that people will make the assumption that the stock will go up, the stock then goes up, but because it doesn't skyrocket, they end up losing even if they end up in the money, because there are premiums that are baked into these movements. So as you can see, JP Chase, if we look at these short-term options, so these are July 17th, you can see some of these calls are priced pretty high at this point. And what I mean by that is we're looking at, you're still having to pay over $100 for a $7, $8 move right here. And that premium is priced in because, again, JP Morgan is a big mover, as well as this is a stock that has moved up pretty quickly over the course of Friday. Again, it's up nearly 6%. So one of the ways that you want to play earnings, or some of the different strategies, is if we're looking just at options, you can buy calls, making the assumption that the stock will go up, or you can buy puts, making the assumption that the stock will go down. So again, when we're looking at these prices, you can click on it and see some of the different volumes in here in terms of how many people are looking at it. Just a non-scientific way without explaining what is implied volatility. But you can see right here that the higher this value is, the more likely that this value is going to change, or the higher it's going to be, the farther away from the money that you are. And this is where a lot of people can get burned in earnings season, is because let's say that if we're on the call side, I say that the stock is going to move to $100 by the end of the week, and it ends up going to 101. Everyone's excited because I was right. However, this option price would go down to 100, so I'd actually lose $89. And the two elements of that is, one, time decay. The less time that this has to get higher and higher, then the lower the value is going to be. And the other side of that is that volatility is going to decrease because the big news that this may move on is going to go away. So you need to be careful when you're making these trades to not necessarily say, hey, I'm going to be buying or selling based off of just where it's going to be reasonably, but rather make sure that you're getting a good deal. So with JP Morgan, I do think that some of these are okay. As you can see, I actually have some calls that go out to the end of the month for 115, and we're already up about 25% on those. That is something that I would recommend if you are going to be making trades, is don't be afraid to get some time with these. Again, for a $100 call for the end of the week, you see it at 189. If you go to the end of the month, that same $100 call is nearly $1 more. I think that that is a fair pricing in, because for an extra $100, I essentially have another 2 weeks by which I can gauge that impact and see if it's going to be going up or down. And this is one of the key things to look at, is if you have time, you can avoid having a bad piece of news here. And if the stock goes down, you still have time for it to come up, or just wait for a piece of good news, particularly for stocks like a JP Morgan that have a lot of movement on them. So just be aware of some of the pitfalls of what you're looking at. Make sure that the stock moves off of earnings, and you can go and look at any of these. If I look at a year, again, JP Morgan announced in early April, you can see right here that, again, the earnings didn't really have as much of an impact on them. And the reason for that is because this was in the bottom side of earnings. So the big news for banks at that time was that they were increasing their loan loss reserves by such an exorbitant amount. So we need to be watching JP Morgan. We need to be watching the banks. They're going to give a good indicator of the financial sector. If you want to see how stocks move off of earnings, I would recommend Google or Yahoo Finance as opposed to Robinhood, just because you can zoom in and get a little bit clearer of an indicator. But the key thing to watch here is make sure that you're not getting had. Make sure that when you're looking at these options prices, that you're not going too far in depth in terms of saying, hey, I need to do all this research, only to find out that you get IV crushed. And what I mean by IV crushed is that the stock jumps up, or these options prices jump up a ton, and then you end up losing after earnings. So one of the strategies that you can do is sell some of your options and take profits going into earnings. So this is just some tips and tricks associated with earnings and how they work and how you can play them. I'm going to be watching JP Morgan this week. There's a few others that'll be on my tickers to watch, and I'll go through some of those tomorrow. But in the meantime, be aware, be smart, and go make some money. So thank you all for your time, and I'll talk to you later.